When I first saw Verdant Solar stock price jump 20% on its debut, I was like, wait, what? Because this wasn't just any company listing on Bursa. Verdant Solar, Malaysia's largest residential solar installer, officially went public on the 22nd of October 2025 at 31 cents per share. And by the end of the day, it was trading close to 37 cents. Now, a 20% pop on the first day of trading might sound normal. We have seen that happen plenty of times with new IPOs. But this one caught my attention for a different reason. Verdant isn't in the oil, tech, or data centers kind of business. It's in residential solar, a business that, at least for now, is supposed to be slowing down. And here's why. Since June 2025, Malaysia's Net Energy Metering 3.0, short for NEM3, the key incentive that made rooftop solar attractive for households has officially expired. That means no more new applications, no more rush to install solar on your rooftop. So logically, demand for new home solar systems should be quiet, maybe even flat. And yet, Verdant's IPO did the opposite of quiet. It screamed optimism. So what's going on here? And are investors saying things that I'm not? And more importantly, at 37 cents a share, am I already too late? To understand why Verdant's IPO matters so much and why that 20% jump might not be a coincidence, we need to rewind the clock a little bit. Back to early 2010s, that was the gold rush era for rooftop solar in Malaysia. Back then, the government had just introduced something called the Fit-In Tariff. And trust me, it was crazy generous. Under the FIT program, if you install solar panels on your roof, the government would pay you around 1 ringgit and 23 cents for every kilowatt hour you generate. Now, put that into perspective, the electricity that you bought from TNB at that point in time was somewhere around 20 to 40 cents per kilowatt hour. Now, essentially, you were selling electricity back to the grid at 3 to 6 times higher than what you paid. That's like selling water back to Shabazz for 6 ringgit a litre when you bought it for only 1 ringgit. I remember a few of my ex-colleagues back then, they were bragging about their solar panels. Every month, TNB was sending them checks. It was like owning a mini power plant on your roof. And me, at that time, I was still a young adult staying with my parents, so I remember showing them the news article telling them, hey mom, dad, this is the future. The government is literally paying you to install solar. But then they weren't convinced. They were like, ayo, why pay the cost of installing solar panels upfront and then have to wait 6 to 8 years to break even? So we didn't install it and that opportunity passed. Years later, when I finally bought my own place, I told myself, this time I'm not going to miss the boat. But by then, the FIT program was over. The government had moved on to something new, a scheme that would completely change how homeowners like me thought about solar. That was the Net Energy Metering, or NEM era. Now, under NEM, you don't make money selling electricity to TNB anymore. Instead, you offset what you consume. Basically, if your solar panels generate 1000 kilowatt hour and your home use 1000, your bill dropped to almost zero. You could think of it like a barter trade with TNB. You give them your excess electricity in the day, and then at night, when you draw power back from the grid, it cancels out 1 for 1. Simple, right? And that simplicity made it brilliant. Because for homeowners, it was a psychological win. You didn't have to worry about future electricity price hikes. The more tariff increase, the more valuable your solar becomes. And that's what convinced me to go all in. And fun fact, coincidentally, the company I chose for my installation was Verdant Solar, the main character of today's story. I didn't know much about them back then, except that their ads kept popping up on social media. But when I reached out, their service was shockingly smooth. From quotation to installation, everything was done in a matter of weeks. The workmanship was clean, the after-sales follow-up was prompt, and even a year later, I'll still get reminders from them to service my solar panels. You see, Verdant wasn't just selling solar panels, they were selling confidence. And in an industry where you're literally dealing with people's rooftop and tens of thousands of ringgit in equipment, that trust is everything. Here's something most people don't realize about Malaysia's solar incentive programs. Whether it was FIT or NEM, they were all built around one powerful concept: scarcity. Every program came with a quota, limited slots, limited capacity. Once the quota was filled, even if you want to pay extra money to install solar panels on your rooftop to take advantage of the NEM, that's it, game over. And honestly, it was genius. That urgency was exactly how the government managed to push adoption so fast. Not just for homeowners like me, but for the country to hit its renewable energy targets. By 2050, Malaysia aims to have 70% of its power generation come from renewables, and rooftop solar plays a key part in that journey. So every time a new batch of NEM quota was released, people rushed in. Solar companies were flooded with inquiries. Verdant Solar, among others, was installing panels non-stop, and businesses was good for them. But like all good things, it came to an expiry date. Fast forward to June 2025, NEM 3.0 quota officially ran out. No more new applications, no more offsetting your electricity bills, everything paused. And that was around the time I started hearing news that Verdant Solar was preparing to go public. My first reaction was like, huh? Now? Of all times? Because logically, when your biggest growth driver disappears, the outlook should dim, right? At least that's what I thought. Until I dug deeper and found out that while everyone was panicking about the end of NEM 3.0, Verdant was already positioning itself for what comes next. And that's when I stumbled upon something called ATAP, a new solar framework that could completely change how homeowners think about solar. ATAP, short for Accelerated Transition Action Program, is basically Malaysia's next big solar policy, the one that replaces NEM 3.0 starting December 2025. You see, under NEM, things were simple. Whatever excess electricity you generated went back to the grid, and TNB credited you one for one. It was predictable, it was easy to explain, it was safe. But under ATAP, there's no more fixed one-for-one offset. Instead, your exported electricity will now be valued at something called System Marginal Price, or SMP, a rate that changes every 30 minutes based on real-time market demand and generation costs. In simple English, if you export power during peak demand, say a hot afternoon when everyone's blasting the aircon, you earn more. But if you export when there's too much solar in the system, your credits could drop. So it's dynamic, it's market-based, and it's no longer a set and forget kind of system. At first glance, that sounds riskier for homeowners. Low fixed rates, no quota-driven urgency. But if you look closer, it actually opens up an entire new way of thinking. Because for the first time, there's no cap. No more limited slots or government quotas. You can install as big a system as your roof and wallet allows, even up to 100% of your home's peak load. And here's where things get interesting. Before ATAP, most people installed just enough solar panels to cover their monthly usage. Under NEM, that meant system sizes around 20,000 to 45,000 ringgit, the sweet spot for residential customers. But now with ATAP, it suddenly makes sense to go a lot bigger. You can generate more than you use, maybe even store the excess in a home battery and sell it back when the SMP price spikes. This completely changes how Malaysians might behave as solar consumers. Before, batteries were a nice to have. Now, they are a strategy. And for solar installers like Verdant Solar, this is a goldmine. Instead of capping each job at 45,000 ringgit, Verdant can start offering larger systems, storage add-ons, and smart management software to help homeowners track when to sell their energy back to the grid. Each installation could become a bigger contract, a higher margin product, and a long-term customer relationship. So while the industry is stuck worrying about NEM's expiry, Verdant is already standing at the starting line of the next race. And that might explain why investors were so eager to grab their shares during the IPO. They are not betting on the past NEM system, they are betting on the future. One where solar isn't just about saving money, but about playing the energy market from your own rooftop. Okay, after all that grandmother story, now you understand what ATAP could mean for Malaysia's solar future. Next, let's talk about what Verdant is actually doing to prepare for it. Verdant Solar is one of the largest residential solar installer in Malaysia, with nearly 95% of its revenue coming from home rooftops. That's both a strength and a weakness. On one hand, Verdant absolutely owns the residential segment. On the other hand, being so dependent on one market market, and one policy like NEM makes them extremely vulnerable to government transitions, like the one happening right now. And that's exactly why Verdant's IPO wasn't just about raising money, it's about preparing for expansion. According to their prospectus, Verdant plans to use part of the IPO proceeds to open new branches in Malacca, Kuantan, and Ipoh, while strengthening their existing foothold in Penang and Johor. If you think about it, this move makes perfect sense. Selangor has been Verdant's stronghold for years, but it's also a very saturated market. Everyone's fighting for the same customers, and most houses that could afford solar have probably already installed it. So the next wave of growth, it's going to come from other states and not just from homeowners. Places like Penang and Malacca, they're full of SMEs and light industrial parks, where electricity bills can easily cross 30,000 ringgit a month. For these businesses, installing solar isn't just about environmental choice. It's an economic no-brainer. Instead of relying entirely on small-scale home installations, they can now target commercial and industrial projects, factories, warehouses, office rooftops, each worth hundreds and thousands instead of tens of thousands. And this is where ATAP could play right into Verdant's hands. Under the new system, these larger energy consumers can also trade their surplus at S&P linked prices, which means Verdant gets to design, install, and manage even smarter, larger scale systems that respond to real-time energy prices. Plus, Verdant isn't expanding blindly. They are also planning to allocate about 24 million ringgit from their IPO funds to M&A and digital infrastructure. Instead of fighting for thin margins, Verdant could use the IPO funds to start acquiring small installers, consolidating the fragmented solar market under one stronger brand. Fewer competitors means better pricing power. Better pricing power means higher margin. And higher margin means stronger earnings growth. That's exactly the story investors love to see. On Verdant's IPO debut, the share price shot up from 31 cents per share to 37 cents, up 20%. If you take that and divide it by their latest net profit, you get a PE ratio of roughly 18 times. To put that in perspective, SolarVest, the biggest name in Malaysia's solar industry, trades at around 30 to 40 times PE. Samaiden and Sunview are in similar range. So at 18 times, Verdant is still cheaper than the peers, even after the first day pop. But unlike those bigger players who rely heavily on industrial and large-scale solar projects, Verdant dominates the residential segment, and that's an angle no one else has fully captured. Now, here's where the story gets even more interesting. Verdant is sitting on 25.6 million ringgit in cash, with almost zero borrowings. That's rare. Most companies at IPO stage carry some debt or liabilities. Verdant's near zero gearing means it's practically debt-free, and that gives them an edge. They can expand faster, fund marketing campaigns to educate homeowners about the new ATAP system, or even go shopping for smaller competitors without needing to raise new capital. In fact, Verdant has already said it plans to allocate around 22% of its IPO proceed for merger and acquisition. So, now comes the million-dollar question. Did I miss the boat? It's easy to assume the opportunity is over, but here's the thing about investing. Sometimes the real story only begins after the headline fades. When Verdant's IPO was announced, most people focused on what was ending NEM 3.0. They saw uncertainty, a policy vacuum, a possible slowdown in residential solar. But investors who bought into the IPO, they were looking at what was beginning. ATAP, a system that could unlock bigger installations, higher value projects, and entirely new business model built around storage and smart energy management. Verdant is not perfect. The company still relies heavily on one segment, and the solar remains a competitive, cyclical industry. But its balance sheet is clean, its brand is strong, and its timing couldn't be more interesting. So, am I late? Maybe to the IPO party, yes, but to the long-term story, maybe not. And even if I never buy a single share, this whole journey taught us something very important. That investing isn't always about catching the next big thing. It's about understanding why it became big in the first place. Because the more I learn about companies like Verdant, the more I realize that investing isn't just about money. It's about curiosity. It's about connecting the dots between government policy, business models, and human behavior. And every time we do that, we become better investors than we were yesterday. If this story helped you see things a little bit differently, don't forget to like this video, subscribe to the FAQ show, and share it with a friend who loves discovering what's really happening behind the market. See you in the next video.